Hey there, everybody. Thomas Wood with ValueCharts.com. It is Wednesday, November 26th, the day before Thanksgiving, and today we're going to talk about one of the trades we had in the futures trading room. Now, all in all, kind of a dull day today. Not a lot of movement. Markets didn't really go anywhere, weren't really going anywhere. However, we did have a short that we took in soybeans that actually ended up playing out for the people that held on to it. Didn't move their stop to break even as soon as I did. Now, what we were looking at was soybeans had a 60-minute trend line going up over the past 3 or 4 days here, and we broke through that trend line right at about 46 and 3/4, and dropped all the way down to a low of 38.5. So basically, just about 10 points, or about 500 a contract. Ended up being about 400 a contract where we were taking profits. Now, we were taking profits at significantly undervalued, and this is just one of the reasons it's important to use a value component to your trading, i.e. value charts. Such as this, because it shows these undervalued points like this lower red bar segment saying, hey, market's moved enough, it's time for it to potentially bounce a little bit. And you see we did since then bounce back up. Now, there are people that are still holding on to this trade because of a longer term outlook. So we had a short term entry for a short signal, but then if you look at your daily price chart, soybeans are actually forming a head and shoulders pattern on the dailies, and we're potentially forming the top of the right shoulder right now. If that's the case, then the first target for this short, if you're going for the swing trade, would actually be down around 1006, 1007 to test this trend line or the neckline of the head and shoulders. And then assuming we can break through the neckline and break through the low here at 995 and a quarter, then we'd be looking for this market to move all the way down to about the 930 area down near these recent lows here. So just one way of looking at the market is by taking a longer term analysis and then finding a short-term entry with lower risk, or drilling down and finding a lower risk entry like we did here, where you had a low risk entry on a 60-minute trendline break and then potentially try to put a break-even stop in place and hold it for a bigger move. That way you can get a reward-risk ratio that works out really well, where you have 100 or so to 1 return, where you risk $100 and you make 10,000, potentially, if it moves a long way and depending on the market, not necessarily this setup, but just one thing to keep your eye on. That's all I have for you for today. I hope it helps. Again, what we're looking at here in soybeans, longer term, head and shoulders. Short term, what we did today was we took a short on a trendline break on a 60-minute chart, looking to hold that for a longer term swing based on the daily head and shoulders pattern. So that's it for today. Hope everyone has a great Thanksgiving. We'll be back on Monday in the futures trading room and in the options trading room. And again, that's it for today. So until next time, happy trading.